Joining us once again for the technical market analysis, we have Bruno Estier. Hello, Bruno.
Hello, Sam.
So, first of all, you want to attract our attention to the commodities market. What more can you tell us?
I think it is relatively important to look at this long-term chart of copper, as we see over 10 years. We see since about 2011, the copper price is in a downtrend. And this is, of course, related to the growth in emerging markets. And we see here has broken an important support level, 225, and it doesn't have too much support until the all-time low around 125 in 2009.
Okay, so can we expect a rebound?
As you can see here, it's very oversold on a monthly basis, and it is also oversold on a weekly basis. Even it is breaking the trend support of this descending wedge. We're very oversold stochastics. We have to hope that this is an excess and it has to rebound.
Okay, let's take a look at oil then. Is the situation similar?
Fortunately, the situation is a little bit better, but let's first focus on the quarterly charts, where we have to remind that the level of 40, 41 is an important pivotal support. So we are, in fact, about that level, and we're in a very oversold situation. And if we look at the weekly charts of oil, what we see is that on these 40 levels, the price action is a little bit more positive than on copper, because for 2 weeks in a row we have positive, closed up slowly, but they are going to come along a crossing up of the momentum. And so we hope that instead of a downtrend, we'll go to a sideways range.
Right. Is this then a negative factor for emerging markets?
Down commodities or declining commodities are, of course, a relatively negative factor for emerging market, and we see that in the relative strength of emerging market versus S&P 500. We see that already in 2014, and also recently we had a decline of this relative strength. However, we see something different in this price pattern from copper. We see that the rebound is a little bit more dynamic than on copper, and we could hope that equities are basically discounting that the worst has already happened in the commodities side. So this is probably a relatively encouraging sign.
Okay, so how does all this impact the US dollar?
Well, usually we say that declining commodities means a higher dollar. And this is about what we can see. We have this correlation where we have the black line, declining commodities, CRB index, and we have sometimes the rising dollar here. It's not always perfect, but recently it has happened along the normal play rules. We see a relatively dynamic up move of the US dollar index, and it's reaching the top part of their range, as we see 6 months ago, and the momentum is not yet overbought, so we can expect a further upside for the US dollar.
Okay, so which countries could be set to prosper as a result?
Well, what we think usually, or we remember the biggest effect was the rising dollar against the yen, which has a strong effect on the Japanese Nikkei. And we see in October that effectively we have a rise of the Nikkei. At the same time, we had the yen index coming down. That means the dollar against the yen was moving up. And so we see the rule is relatively correct. The strength for the Nikkei is go even beyond the influence of the rising dollar, because we see that even as the yen is flattening out a little bit, it's even able, the Nikkei is even able to make new highs. So Japan is really one of the strongest markets currently.
Okay. How similar then is Europe to this?
Europe is a little bit different in the sense that the effect has not been as strong as for Japan. However, recently, since October, the relative strength of Euro stocks versus S&P 500 is rising. And we see that we have an uptrend with a consolidation, which probably, here we have to realize for the end of the year that we are going to stay in the trading range between 34.85 and 3300, and only probably until the end of the year we'll move above the recent high toward 3,500.
Okay. In conclusion then, Bruno, what's the outlook for the US market?
It is still relatively fine. If we see on a weekly chart, what we noticed is that after October, where it moved below this nice cloud here, which was a signal to be cautious, it has rebounded back above the cloud, which is mainly saying that the former uptrend could resume. Probably we'll spend some time on the sideways range first, but later on, with the end of the year coming on and the beginning of the new year, we should move toward 2150, 2160. We see also on the daily charts that the pullback that we had after the strong October rise just stayed at a former resistance at 2020. So it rebounded on cue, like technical analysis would suggest. And therefore, the next coming pullback should be also relatively minor. We expect one around 2060, 2070, and then new highs above 2120.
Okay, we'll wait and see. Bruno, thank you very much.
You're welcome.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.